Now, mortgage rates ticking down a bit from last week. 30-year fixed rate hovering just a little bit below 7%. It's a 3-month low as Doug Flynn joins us, co-founder of Flynn Zito. Not expected to be drafted tonight, but he is an expert on the mortgage rates, right? So, all right, we know the Fed's going to cut at some point, mortgage rates. Now coming down a little bit, what does it mean for housing?
It means a lot. The housing market has not done well. The sales have fallen off a cliff for most people. They did not want to touch anything with a 7% mortgage rate now that we're at the lowest point in the last 6 months. So the numbers will begin to get better. There's a little bit of a lag when mortgage rates go down or up to when it actually affects, because it takes time, as people know who've bought a house, how long that process is. So a couple of months from now, it'll start to show up as positive news in the housing market, just in time for the election.
Just in time. Well, you sound so skeptical. You're saying there's, don't tell me there's politics behind all of this.
You know, this might actually be more of the market forces anticipating where rates are going to go and getting a jump on the Fed and it lowering, especially as the economy weakens a little bit. So you could take it one side or the other there on how it's going to go. But I think it's more market forces at play here at this point.
All right, let's talk about electric vehicles for a moment. There's some news today that I thought was very interesting. I remember months ago, the audience might remember you told us you were going to order one of those Cybertrucks, but I think you backed out on that.
I did.
Then the company Rivian, which is the main rival for Tesla making electric vehicles, its stock was up a lot today. When I looked, there it is, 21%. I looked, it was up even more earlier. It has a deal with Volkswagen. What's going on with Rivian? And maybe this, because the company wasn't doing great, right, as a company, and now it makes this deal with Volkswagen.
No, all of these EV manufacturers burn through a lot of cash. It takes a lot to really get a car to market and to sell it. And even Rivian loses, I think the numbers I saw were about $39,000 per vehicle that they sell, they lose, which is why they have negative earnings. So they're burning through their cash. They had a couple of $1 billion in cash still there. But Fisker, as you might know, about a week or two actually went bankrupt. So they're out. But so this company has some great technology. And what Volkswagen is doing is they're taking a stake in the company to a total of about $5 billion. $1 billion of it is an ownership stake in a preferred convertible type of security, but the other $4 billion is on investing in a joint venture for technology. And the word is that gives Rivian a lifeline to bring out their R2 and their R3 vehicles and sort of stay alive. And it gives Volkswagen a way to maybe come out with another brand. This isn't going to necessarily compete with their own brand. It's going to be maybe a new brand with the combined technology, an all EV line, and they'll share, and there'll be some similar models between the two of them. And that's what the play is here. And that's a $4 billion investment over the next couple of years that could pay big dividends for Volkswagen and certainly pays big dividends for Rivian.
Certainly did for their shareholders today. Stock up a lot. Now, speaking of shareholders and people investing in stocks, I want to end on a conversation about 401k plans. We actually teased this yesterday, so hopefully everybody tuned back in to talk about it, because I know you wanted to speak about this a little bit. Balances are up, the newest numbers we have. I think we have a screen we can show, you know, how people are investing in terms of age across the board here, whether you're a young person getting older and where the balances are. But what does this mean overall with contributions reaching these highs?
Yeah, it's really great news. You know, we've heard for so long as the pensions have gone by the way of the dodo bird and 401ks have really taken over, it put more emphasis on the individuals to be in charge of their own retirement. So it's really great news to see that the contribution levels for individuals is at an all-time high. And when you combine that with the company matches that they do, combine the average amount that is being put away of people's salary, and this is through the Vanguard study, is almost 12%. It's 11.7% of their income. That's an all-time high. Now, all of these companies really want you to try to get in a combined manner between your contributions and the employer match to a total of about 15% of your salary. That number gets you in the ballpark to be able to retire comfortably with an amount similar to what you might have gotten from a pension. And everyone's still below that. But this is an all-time high. The numbers used to be really, really low. And a lot of this has to do with some auto enrollment features that the government mandated and automatic increases. But people are adding more, and almost half the people raised the amount that they put away last year. So a lot of good news in there. There's a little bit of bad news too, but that's a lot of the good news.
But overall, you know, and then you're in the U.S. stock market real quick, where you make money over the years. I mean, if you're in it for the long haul, you always make money, right, Doug? I mean, that's how
exactly.
It's been, you know,
no question.
Never
and
lose.
Just one bit of bad news: the hardship withdrawals did hit an all-time high, and that's for people that were trying to avoid foreclosure or getting evicted and some medical issues. So that went up as well, which shows you the divergence of the people there. There's some people having a tough time, and other people are doing really well that we've talked about. But overall, good news.
Tap in early on those hardship withdrawals unless you have to. Doug Flynn, thank you on that.